All right, here we are. It is Wednesday. Happy Hump Day. And I'm here with Wright-Patt Credit Union and our Finances in Focus live chat. Today we're going to be talking about credit, catching up a little bit on credit, the credit report and score, how it works, and how it impacts you when it comes from a lending standpoint. We'll take just a few minutes to let a couple people jump on. Hopefully you've grabbed your lunch. I'm actually going to jump on myself. And we'll get started here in just a few minutes, but I want to thank those of you that are coming on right now and welcome you to our Finances in Focus, catching up with credit today. Oh, I'll turn this down so it's not, there we go. So today I'm excited because I am not alone. My name is Ivy, and I am a certified financial counselor, community development specialist here at the credit union. And today I am joined by my wonderful teammate, Bailey, who is out of our Columbus market. Like I said, we're going to wait just a few minutes to let a few of you jump on. If you're out there, go ahead and let us know you're here. Check in, say hello so that we know you're out there. And we'll get started in just a second, but I'm excited to be joined today by my colleague, Bailey. Today, as I mentioned, we're going to be talking about credit for a few minutes. We have a couple of things that we want to make sure that we share with you, but if at any time you have a specific question that you'd like answered, feel free to type it in the chat box and we'll do our best to get that information to you. I do want to note that today is the information we share is for informational and educational purposes only. If there isn't something that we can answer with you here live during our chat, we will work with you one-on-one to get that answer for you. I always tell people don't go out and cash out any 401ks or sell any cars based on the little bit of information you get from us in this chat environment. Be sure to sit down with us on a one-on-one professional basis to get insight to your specific needs. So like I said, hi Todd, thanks for joining. Glad to see you there. Again, if you're tuning in, we're talking about credit today and catching up on the credit report, credit score, and how it impacts your lending. And if you have any questions at any point during our live chat, feel free to ask it. Be sure to share this out to your friends so that while they're crunching on their salad on this happy hump day, they can get a little bit of information as well. Let's go ahead and dive in first with a quick introduction. As I said today, I'm glad to be joined by Bailey from our Columbus department, Columbus market. Bailey, can you share a little bit about what you do in Columbus for the credit union?
I am the business development coordinator, so I handle all of our sponsorships and community participation. You may have recently seen us at the Jazz and Ribs Fest. We also have financial education in Columbus, so I help teach those seminars as well as some of our volunteering efforts.
Yes, so basically, if you're out and about in Columbus, you're probably going to run into Bailey, whether that's on the education side or the community side. Bailey is definitely keeping up with what's going on in the Columbus area from the event side. But Bailey also has several years of experience from our financial coaching standpoint in our member centers. So that's part of why she's here today with her financial education and financial coaching expertise. She's going to chat in a few minutes about how your credit score impacts lending opportunities and some things to keep in mind there. So we'll jump right in because, this 30 minutes goes quite quickly once we start chatting. And today, as I mentioned, we are chatting about credit, the credit report, the credit score. Again, if you have specific questions, feel free to chime in and ask. But I wanted to start today just giving you a quick overview of what credit even is. I know that may seem a little obvious in some instances, but it can be a little confusing to navigate the world of credit. So I want to define that a little bit. And then we're going to talk again a little bit about how it impacts you and your lending opportunities and other opportunities that you may have. And then finally close out with a few tips that you can use to improve or maintain your credit. Again, feel free to share this message so that we can get the word out to many of our members and community. So let's first just talking about what credit even is by definition. When we think of the world of credit, a lot of times we think of lending and debt, which primarily it does deal with our finances. If you look at credit from a definition standpoint, it deals with our trustworthiness, our likelihood to do what we said we were going to do with what we agreed to do it with. So for example, if we got a loan, how likely are we to pay the loan back according to the terms and agreements that we signed off for? If we get a job, how likely are we going to actually do the job that we applied and were hired for? if we obtain car insurance, for example, how likely are we going to be, how risky are we to actually need the car insurance? And our credit gauges our likelihood and trustworthiness in many of those areas. I also like to tell people it's one of our financial scores. So there's a couple ways that you gauge your financial health. You take a look at your credit reports and scores. You also can look at your net worth statement, which is how much you own versus the debts that you have, what you owe, your assets and liabilities. So your credit provides another way to gauge your credit, your financial ability and your financial wellness. When we think about credit, we think about credit in a couple ways. We think about credit from the credit report and the credit score. And so those are the two places that you go to find information about your credit worthiness. I always like to explain the credit report and credit score kind of like the report card and your GPA, right? So if you have a credit report, your credit report lists in narrative form, more words than not, words and numbers, information about your financial history, your employment history, places that you've lived, if you have any public judgments or liens. All of that information is going to be collected in a report style, narrative style place for you as well as consumers to navigate and read. There are 3 main credit reporting bureaus: Equifax, Experian, and TransUnion, which hopefully you may have heard of some or all of them for different reasons. And those 3 bureaus are where organizations report in and out of to provide you information. So that's the credit report. The idea of the credit report is it's supposed to be one easy to read document. Some are easier than others, where your financial information and other information I noted are listed. Those credit reports are updated on an ongoing basis, and they report not only information about the balances of those accounts and debts and loans that you have, but also your activity. And that's the most important piece. So then if that's the credit report, like your report card, now we jump over to the score. And the credit score deals with giving you a grade, if you will, for what that information is on the narrative. Now, we use, and 90% of organizations use, what's called the Fair Isaacs Corporation or the FICO scoring model as our main way of determining your credit score. The FICO score uses this magic formula. I'll actually show you how the FICO score is broken out, but uses a magic formula that looks at how much you are paying, how much debt you have available to you, your payment history, the types of credit that you have, and the mix of credit that you have, as well as how old or new your credit is. It's a magical formula. They place all the information in, and it spits out a number based on the information in those reports. You, just like you have 3 reports, you actually have 3 scores as well that all consider what's on the report. I always tell people the 2 main things to think about when you think about your credit score, the most impactful pieces are your payment history and how much credit you have available to you versus how much you're actually using. So if you look at this little chart here, that's actually 65% of your score is determined by how much credit you're using versus how much you have available, and then most importantly, 35%, how do you pay your bills? So I always get the key question of what can I do to improve my credit or to keep my credit healthy? Pay your bills on time, every time, all the time, on time, according to term. When you sign off on a loan or an agreement, pay it as agreed. Pay the minimum balance at least as agreed. That's going to have the number 1 impact on your score. The number 2 impact on your score is going to be how much credit you actually have available to you versus how much you're using, or what's called your credit capacity. And so you want to understand that while there's a mix of things that impact your score, those 2 pieces, just for a quick description, will impact your score the most. So if you can manage how much you're using of your credit, meaning if you have a credit card you're not using it all, we'll talk in a minute about how to balance that out, and then keeping your bills paid on time, keeping your debt affordable, those things will impact your credit the most. So we'll loop back around to some tips on maintaining and improving, but at a high level, I wanted to give you your credit report and credit score. I also want to share with you where you can find those pieces of information. The annualcreditreport.com website, annualcreditreport.com website is where you can find your credit reports, all 3 reports. You can actually pull each report for free, one time per year. So I always tell people every 3 or 4 months, go out and pull one so that you can have ongoing free monitoring of your credit information. You can also find your credit score. The official score is at myfico.com because that's the organization that puts it out. You can find it in other places, but myfico.com is the main place that you can find it. Myfico.com is potentially going to charge a small fee for it, but you do know that you're getting your official score. There are other places that maintain your score. Some credit cards maintain your score. When you apply for a loan, your FICO score is pulled at that time. And when you are applying for employment, sometimes there's a soft pull to get your score. So those are other places you can get it. But that is the official, those are the two official places to get it. Annualcreditreport.com for your free report. That's the government hosted and approved site, and then myfico.com. Now, there are several tools out there, apps, and resources that offer monitoring. I can't name them specifically on here, but they are great tools and apps. I like them. I use many of them. Keep in mind that some consumer-facing apps that do not note the FICO score as their reporting score are using a different scoring model. It's called the Vantage 3.0 score, and in some cases, the formula that uses will spit out a number that's a little bit different than the FICO score. Could be higher, could be lower. But you want to keep that in mind because 90% of organizations are using the FICO score. So you want to know what the FICO represents. So that's just kind of a quick elevator speech on kind of what the credit report and score are. It's important to maintain both of them, the report and the score, well, because it gives you access to opportunities or could deny access to opportunities. And so it's really important that we understand our credit, we understand our credit reports, and we understand how they impact us. I just want to note, we do offer one-on-one financial coaching, both through a program that we have here in a partnership with Wright-Patt Financial Wellness that offers coaching. We can look at a credit report with you, talk to you, make recommendations to help you navigate to improve and strengthen it. In many cases with credit, that's the good approach to take, to sit down one-on-one with somebody, because everybody's situation is unique. But at this time, I kind of want to throw it over to you, Bailey, because I feel like I've been talking plenty, and ask you a quick question. I was just talking about how your credit can impact several things: lending opportunities, employment opportunities, insurance opportunities. Specific to lending, because we are a financial institution, can you talk for a few minutes just about how your credit can impact your opportunities when it comes to getting loans and other financial products?
Definitely. Like you said, good credit is similar to trustworthiness. It's important to make your on-time payments to correlate to good credit. So if you have good credit, you're more likely to get approved for loans that you want, higher dollar loan amounts should you need them. It's also an indicator that you're low risk. So if you're paying your bills on time, we're more likely to look at your credit report and see, hey, they're continuing to pay on time, we can trust them with another chunk of money to pay back to us. Let's see. You can get lower rates with good credit as well. So basically just showing that you've proved to pay all your bills on time, you can be at a higher tier, basically, a lower tier for your interest rates. Then I would say good credit.
Well, you just mentioned something.
Okay.
Good credit. Let's talk real quick about what good credit even is.
We're getting another question here too.
Awesome.
Just someone asking again, what are the best places to check your credit score? So how can we check if we have good credit or bad credit?
Yeah, so like I mentioned, myfico.com is the official Fair Isaacs Corporation website to check. You can also check your credit score. Usually when you go to annualcreditreport.com, they will give you a link out to go access your credit score. Credit Sesame has information on your credit score, and that's a general website. There are other resources out there. Like I said, I'm limited at what I can share from a product standpoint, but people have asked me about tools such as a Credit Karma or a freecreditreport.com. These are commercial sites that do have the information out there. So just keep in mind, again, that different sites do offer different scoring models. And so you want to be mindful of what score you're looking at when you're there. One thing I wanted to note, because Bailey mentioned the whole point of good credit, that good credit gives you access to good interest or better interest rates and really approvals in many cases. What in the world is good credit? So credit scores, I failed to mention, range from 300 to 850. And just like the GPA, the higher the better. And just like the GPA, if they drop, it's a little hard to get them back up, but it's possible. But credit score, a good credit score is really going to be in the 700 and above club. Would you agree?
I would agree, and also note that it's not related to your income.
Yes.
It has nothing to do with how much you make, but your ability to pay back what you're borrowing.
Yes, it's definitely
working with what you've got.
Some financial experts call it a debt management score. It's truly what you're doing with what you have, how you handle what you have. And so a good score is in the 700 and above range. I always tell people, try to get to the mid 700 club. That's going to guarantee you not only approvals, but the best rates and terms. And when I say guaranteed, let me say that's going to guarantee you the best opportunity for that. Other factors do impact your approval on loans, like your other debts that you already have, and those kind of things. But from a score standpoint, that's going to be your first foot in the door. So keep that in mind. I say that because a lot of times people will say to us, "Oh, I have a good credit score. I'm in the 600s." In many cases, a 600, the mid to low 600s could be not only the difference between approval and denial, but like in a 30-year mortgage, it could be the difference between $30,000 in some cases. And so, good and great make a big difference in the credit world, I would say.
Yes, definitely. So you are going to be paying less towards interest and more towards the actual principal of a loan if you have a better credit score, because you're going to have the lower interest rate.
Okay, makes sense. So thinking of getting a loan, I want to apply online, or I want to come in to a credit union, to a financial institution and get a loan. What should I be doing first to make sure that I'm setting myself up for the best situation?
First and foremost, make sure that you don't have any collections out there that still need to be paid. Tackle those first, and then start thinking about what you're wanting to borrow for. If you don't have any credit at all, I would suggest getting a cosigner for an auto loan. From there, we have first-time user credit cards, shared secured products, things that just show your trustworthiness to pay things back. Also, if you have a cosigner, that's someone that's vouching for you, kind of stating that, hey, I support this person, I trust they're going to make these payments, I'll put my own credit on the line and cosign for them. So those are all different opportunities that you could explore, as well as just having money down for a loan. So like for a car, have 20% down in cash, because that shows that you're invested in this loan and you're going to continue to pay for it.
That's nice. So have a goal. I heard.
Yes.
I heard in there, like, have a reason for the loan, because a lot of times I think, unfortunately, we tend to get loans in more emergency situations as much as we get it to help us to. I always say loans become microwaves instead of asset builders. Like, instead of it being a way to help us reach our goal over time, it just becomes this quick fix. So having a goal kind of helps that. I heard you say start small if you don't have a lot of credit. And then I heard you say make sure you handle collections first, because those negative type of things can
definitely impact the score and just the reflection of your whole credit picture.
Awesome. Which, on that note, a lot of times people ask me how long negative information, or I have a collection, should I address it, should I leave it there? Just know that in general, negative information can stay on your credit report for 7 years from the time of delinquency. So that means 7 years from the time it was reported as a delinquent payment. If for some reason that delinquency goes away and starts again, that 7 years starts over again. And with some debts, it stays in collection status until it's made good on, until you pay it. So especially in the case of many state and federal type collections or liens, those stay there until they're taken care of. And so one thing we do know about old debts, they don't have the same impact as new debts. In fact, within a 24-month period, many debts lose over 25% of their impact on your credit score, but they still have an impact. And as Bailey said, at the end of the day, it's all about gauging your risky business and your trustworthiness. When lenders and organizations see debts not paid or collections, it does tend to raise a red flag, and it, at minimum, pose opportunity for more questions to be asked, because they want to know, at the end of the day, businesses want to get paid. You want your resource, but they want to get paid in theirs. That's how businesses stay afloat. It's fair to everyone, and so they have to be able to gauge that with something. So yeah. Are there any questions?
And so you mentioned that the delinquency could stay on there for like 7 years. What about like the good stuff? Are there good things in your credit score that'll stick in there a while, in your credit report, I mean?
Yeah, so the good news is the good stuff, while active, will stay forever. But things do drop off. So with personal loans, for example, which are considered installment loans, the activity is there until it's paid off, and then I believe it's 7 years after it's paid off, it will go away. Credit cards, because they're revolving type debts that you could, once you're approved for them, as long as you continue to pay the bill, can continue to have them open and active. As long as they're revolving and active, they will always be on there. So the good stuff sticks around too. I always tell people it's kind of like good friendships, right? You want the good news on there to outweigh any of the bad news, the good memories to outweigh the bad memories. But yeah, good question.
I always tell people leave the credit cards open even after you pay them off, because again, back to that trustworthy point, they want to see that you have access to all this money, but you're only using this little bit that you have with revolving credit.
Yeah. So I guess on that note, question we always get is about utilization. Should you keep them open? Should you use them? How much should you use? So as Bailey said, you want to keep them open. Keep things open and active. Even if you've paid them off, I always recommend charge a tank of gas a year and pay it right back off, just to show that activity. Get the bill first, because the bill coming shows that the payment cycle has run through, and that's what reports to the agencies. Get the bill, pay it back off. Also, that keeps your capacity open, as Bailey mentioned. They want to see the capacity is there. You have availability even if you're not using it. Capacity is how much credit you have, or debt you have available to you. So let's look at the case of 2 credit cards. If you have 2 $5,000 credit cards, which is $10,000, and you're using $1,000 of it, you have a 90% capacity, or you have a 10% utilization ratio. You're only using 10% of what you have available to you. If you have used $5,000 of it, whether it's $5,000 on both cards or $5,000 on one card, you have now used 50% of your capacity. So regardless of how you use it, that has an impact. That's part of that whole amount of debt, that capacity ratio. Now, we'll note that if you charge one up to the max, up to $5,000, that could red flag a lender more so or quicker than I charge $5,000 or $2,000 on one and $1,000 on another, because that also lends the question of cash flow. How are you using things if you're maxing out credit cards? And so people with the best credit scores tend to keep their utilization down to no more than 30%. If they're not paying their cards off, no more than 30% of their utilization as far as revolving debt, your credit cards and things like that in each month. So in that example I gave, we're talking about no more than $3,000 of that carried over each month if you're not paying it off. And I know that here is the best practice. If you can pay your credit cards off within 3 months, that's just keeping you in a good situation. Yeah.
Definitely. Let's see. So what are a few tips to help people build or maintain their score?
So building and maintaining your score, you mentioned a couple. One is to start small. Start with something like a first-time user credit card or being a co-signer on a loan, a secure credit card. A secure credit card is actually a credit card where you put cash into we put cash into a savings account that is held as a security, and in exchange you receive a credit card. And it functions as a credit card, but if for some reason you didn't make payments, there's cash there. I think it's $200 or is it $250?
We go up to, I believe, 1,000.
Up to 1,000, okay. But I think the minimum is $250. Mm-hmm. So at minimum $250, up to 1,000, where you put the cash in as a security, but you're using your card as a credit card, and so it's growing credit activity, where a debit card is completely linked to your checking account and does not have any credit activity linked to it. So that's one thing. Paying your bills on time, all the time, every time, all the time, as I mentioned. Taking care of collections is huge, because that will impact your score. Getting those credit ratios down. Another thing that would be helpful, and I actually want to go to my notes because I have a whole 8 tips here that I wanted to make sure I shared with you. Is really maintaining a checking account without overdrafts. Now, that's not going to give you any more guaranteed approvals, but that does 2 things. That gives you a good relationship with a financial institution. It shows them that you can manage your money. And I always tell people, practice with your real cash before you start using credit. And so it also helps you to practice navigating and managing your money before you start using borrowed money.
So does that actually show in a credit report?
No, today checking accounts and checking activity does not show.
It just reports
It
to
just
check
reports
systems.
to check systems, which is kind of like the financial institutions credit world, but it doesn't show on credit reports. Now I will tell you, utility bills don't either. Cell phone bills don't either, even though they typically pull credit to grant you those. They're usually not reporting unless something's wrong. So if you do see a utility or cell phone company on your report, check into it, because it's probably because something has gone into a collections or negative status. Same with cable. Yeah, any utility or entertainment services typically aren't reporting for the purpose of billing your credit. So understand that those won't have an impact. But like I said, maintaining a healthy money management practice first is a good way, so that when you're ready to borrow, you, one, know how much you can afford to pay each month, and then two, are able to continue to navigate healthy and not having overdrafts and negative activity on your account. The other thing was keeping your bills current and under the limit for the 12 months, paying them down ahead of time if you can. If you have collections, create a budget so that you can understand what you have available for debt repayment, and then make contact with those organizations to potentially negotiate debt settlements or negotiate repayment, and then in some cases you can ask for the removal of that information from your credit report. They don't have to grant it, but you can ask for that. So getting negative information, exactly, never hurts to ask. Getting that negative information off of your report can also, give your credit quite a boost. And I think on that note, if you already have debt that you're trying to manage while building your score, it is making a plan to pay those debts on time and getting them all on time if any of them are delinquent, and then paying them off one at a time. In some cases, people like to start with the highest interest rate. Some can start with the lowest balance. I like the lowest balance because you can see progress quickly, but the main point is make repayment a priority so that you can get those ratios down and you can show that active and healthy payment history. Bailey, would you add anything, any other tips to that?
I would just say, note that if you're struggling to make your payments as it is, it's not the time to be borrowing more. I think a lot of people, as I hear you say frequently, we don't have a debt problem, we have a spending problem. And so it's really important to evaluate, should I be borrowing more money? Do I need this? Or is it an emergency? Just why you're really borrowing.
What the purpose is. And I think that's huge. It's funny, we're having these different topics and one always loops back into the other. When it comes to managing credit well, it's truly about understanding your financial goals and financial needs, and really where credit and debt fit into that as a piece to the puzzle, not as the number one solution. Even as a financial institution with lending products, we never want people in debt that they can't afford, or debt that's going to put them in a bad situation or impact their credit scores negatively. So like Bailey said, it's really important, if you find yourself in a challenging space, to stop and evaluate and ask for help. There are several resources out there to help you. We offer several of them. I mentioned a few minutes ago, Wright-Patt Financial Wellness. We provide one-on-one counseling. We can look at your credit report. It doesn't have to mean there's something wrong. We could look at your credit report and give recommendation for just things to improve or continue to maintain where you are. Bailey mentioned there's several solutions out there from a product standpoint that can help you in getting your debt under control, showing healthy history. We have tools that help to avoid some of the predatory lending resources that are out there. We actually have a payday exit loan, which is one of the coolest tools that I've seen here in a while, that helps individuals that are dealing with payday loans, which are predatory loans that can typically hit your credit picture pretty hard and negatively, as well as your budget. Get you out of that into a more favorable loan that's affordable, gives you a little time to get back on your feet and get ahead. That's just one example. There's so many solutions out there. There are calculators that you can access that will help you to see when it comes to debt, not only what your principal balance is, but how much you're going to actually pay when it comes to paying interest. That's hugely important.
One thing from my financial coaching days, I realized not a lot of people actually know what interest rates they're paying on loans. They just are blinded by the monthly payment. So I definitely recommend knowing what your interest rates are for each of your loans and evaluating, can you get a better interest rate somewhere else, doing a debt consolidation or a refinance. So those are also,
Huge.
yes.
And understanding when it comes to a loan, you're paying the principal, which is the amount you borrowed, and in most cases, interest and fees. And so you want to understand not just the monthly payment, but what's the big picture of how much you're actually paying for that debt. It can be quite
Thousands on
top of what you thought you were borrowing.
Mm-hmm.
Yeah. So I think as we've wrapped up, we will close out. I want to close out to mention to you all to check out our website, wpcu.coop. We can actually type that into the comments as well. There are financial worksheets out there. If you go to our website, look up financial worksheets, go to the education center, and there's information on how to contact us about our GreenPath Financial Management, as well as sitting down in any of our member centers with a financial coach. All that is out there. We encourage you to reach out to us if you have additional questions. We'll be happy to take those and help get the answers for you. But 30 minutes is up.
Already.
We've been chatting. That was great. If you all have questions, thank you for tuning in. Thank you.
Thank you for having me.
Yes, Bailey, thank you for joining. This has been Finances in Focus with Wright-Patt Credit Union. I'm Ivy. This is Bailey. And have a great rest of your happy hump day.
See ya.